tomorrow to expand on that and a lot of other things in Trading Buddies, the show, which of course comes along on this very channel each and every Monday and Thursday. That's not a holiday, or we're not doing something else. And that is at, goodness me, what time these days? It must be 5 to 4, so 15:55 Singapore and Hong Kong. Of course, Australian time, it is 5 minutes to 7 in the evening. Righto, I'm sharing my charts of what I look at for the beginning of the week each and every Sunday or Monday morning if I'm a little bit lazy on a Sunday. And I'm looking for game changer bars. Game changer bars, of course, are candles, bars, whatever you want to call them, that are giving me a directional bias for the week ahead. And this week, there are quite a few. I'll go through very, very quickly. I'll go through all of them, but I'll concentrate on the ones that I think are of particular interest to myself. Aussie versus the dollar. We spoke about the dollar potentially being strong this week for maybe a brief period, but maybe it's a buy for the week. That would make the Aussie versus the dollar a sell. And we do have a weekly game changer bar that suggests that that may well be the case. The level's interesting. There's not a lot of history at that level. Let me have a quick look at that. Or is there? That's the level that we're talking about right there. So it has had strong support in the past, rangy there, didn't support the market very well there. In fact, it failed. But what I do see is this low down here and the fact that we've bounced up to that resistance level. And it does look to me as though that we're going to go into a range here for a little bit of time. Therefore, the current trend being lower high, lower low, lower high, lower low, then perhaps this is a lower high, and I think short is the way to go. Then I have a think about some fundamental issues that, well, fundamental events that have over the past week or so, because of all the Asia meetings between all the leaders and the Australian Prime Minister and the Chinese President, Xi, have had an interesting conversation, which may relax, may is the pertinent word here, may relax the tension and tariffs between Australia and China. And for that reason, I've got a sneaking suspicion that if that was to come to pass, and I'm not suggesting it has, I'm suggesting it's possible, that you better keep your eye on the Aussie, because if that's the case and China relax all these tariffs that they've got on all of Australia's products, then I think this Aussie current situation, which is negative, may reverse itself. But I don't think that's today. I don't think it's tomorrow. So I think Aussie versus the dollar is a sell, and that bar could be interesting. Again, it's giving me a directional bias, and if the market opens against that, then it may give us an opportunity to get in higher. We'll see. We'll see what the market does when it opens tomorrow with all these things. CAD Swiss is probably the most interesting for me, and I would be very, very keen to trade this tomorrow if it does come up as a non-gap, if you like, put it that way. And the reason I like it is, well, let's go back into the bigger time frame. And this range that we've been in for the longest time, I haven't got my time chart on that, but where does it go back to? Can't read it because I haven't got a color on it. Hang on a second. There we go. So that goes back to 2015, the 1st of the 1st, 2015. Now, those of you who have been trading for that amount of time will recognize that date as a major game changer, because the euro and the Swissy decoupled, and the massive movement in the market, which was to go thousands of pips in a heartbeat, was absolutely substantial. That's that candle there that we're looking at. Pretty much, not that it really should have done a whole lot to CAD Swiss, but of course it did. And that's where we've been inside for the longest time since that period. So we've hit the top, we've come to the bottom, we've hit the top again. My trajectory tells my trajectory indicator, which is my eye, tells me that we're headed back to the bottom of that range. And for that reason, I'm thinking short this week. Now, we have had a break of the bottom of the inner range, if you like, that rectangular box, and we have had a retest of that. Now, what I would love to see, to be fair, is price come back into here and give me a lower high, maybe at this very, very juicy, I'll call it, level, because it's got a great trade line there, or great trend line, if you like, whatever you want to call it. So a rally up to here and a failure to take out that high would really interest me. But on the weekly chart already, I think it is a break and retest. So it's a potential for this to be A, B, C down here. Again, if the market is kind and doesn't open with a big gap in the morning, I will place an order underneath this bar with a stop loss above it. Of course, if the market takes off and gives me that lower high off this trade line, then I've got a far better price. So my directional bias is short, and I will be looking to trade that tomorrow. If we don't get a massive gap in the market, we shall see. Swiss yen, I'm going to skip straight through this because I think it's just a hopeless currency pair to find a directional bias on. It looks like we've got a double top. It looks like we're going short, but I haven't got that lower high, and I've got long tails all over the place. I'll just skip straight through it. Don't want to know. Euro Aussie, Ash spoke about this, and look, I'm pretty much on board with him, I've got to say. You can see that level, and I think that's pretty much the level Ash was talking about. That we've broken through, come back and retested. I think on that level, it does look very much like a buying opportunity. You can see the double bottom sitting here. The one thing I don't see is the higher low, which is really what I significantly need to see before I trade it long. It's not there on the monthly. Is that it on the weekly? Maybe it is. But again, we've got a combination of high test bar, low test bar, high test bar, low test bar. So whilst I can see that we've failed to come back below this 153.50 level, which is strong, you can't deny that that's got a very, very strong support level, very, very strong resistance level. And now it may well be the support level that launches this off. So I'm in favor of that. I think that makes, it's the course of least resistance as far as I can see, and it makes perfect sense to be wanting to buy it there. Do I want to trade that? Look, I don't think it's the best because you're trading into a resistance area here as well. So, the size of that bar, if you were to trade it, get your stops down here and trade it straight into that high, I don't think it's the best trade in the world. Gash alluded to that by saying wait for a better buying opportunity if it retraces early in the week. And I think that's wise counsel. And I too would be looking for exactly that scenario. Of the rest, Euro Swissy is giving me a buy signal here. I'm not with that, to be fair. And the reason I'm not is this trend is super, super aggressively short. And to trade it just off that really one scenario where we've had a rally and a bit of a retracement, failed to take out the high. And that does concern me somewhat. So I would be looking really for this to break out of and give us another high, right? We need a higher high here, in my humble opinion, before this does look like a buying scenario to me. So definitely not one that I want to trade. Euro versus dollar, we spoke about that. The Aussie and everything against the dollar does look to me an opportunity to trade it short this week. I'd want a better scenario than this one candle. Weekly pivot's going to probably not move too far, I wouldn't think. You're going to have that level in the way, and that level there is pretty much in the way. You may be clear of it, you get underneath it, and that kind of makes sense. But what I'd like to see is price come down here, hit a resistance level, give me a lower high, then I can trade it short. But off the bat, I don't think that's a wise thing to do. Pound Aussie, it's giving me a weekly bar that's suggesting we go long again. Probably directionally biased exactly in that direction. Is that the best one? You've probably got 1-to-1 before you hit the resistance level. But like I said, I think CAD Swiss is still better than that. So I'll be looking at CAD Swiss, not pound Aussie. And that little thing about President Xi is in the back of my mind as well, I've got to say. Pound Swissy, look, again, if you look at the bigger picture here, and that's the monthly chart, you've got to see this big rejection bar. And then you've got to see a buying bar. That really didn't do too much, I've got to say. If you're buying on the back of that reversal bar, you'd reckon you'd go to a resistance level. Well, I would. That would be my summation. Now we've come back and hit another game changer bar, or even a train track reversal, or bullish engulfing, whatever you want to call it. So it does look potential to go long on the weekly chart. But again, you've got a fairly decent resistance area that you're trading into. So I still don't think that's the best. And for that reason, I'll still stick with CAD versus the Swissy rather than pound versus the Swissy. Kiwi versus the Swissy's all about the Swissy, right? And it's the same thing, right? You've got a resistance level dead ahead. You've had one rally. You've had a failure to negate that at this point, and you've got to bounce off the monthly pivot. So it does look to be going long. I would have to agree with the directional bias. But I've also got to say that the Kiwi has had an amazing run, and you've also got to take into consideration that the Kiwi would be changed, I'll put it that way, in terms of, well, you've got to expect that the Kiwi is going to be under a little bit of pressure if they don't raise the interest rates, which happens on Thursday, I think it is Thursday morning, by the projected amount, which is 0.75%. We've already seen central banks around the planet easing off, if you like, that accelerated with interest rates. And the Kiwi is tipped to go, I think it's to 4% on the back of a 0.75 interest rate increase on Wednesday or Thursday. That may be just a little bit ambitious. So I'm thinking the Kiwi might not be the buy that it appears at the moment. It's very, very strong, I've got to say, but it may not be the one that I'd be favouring for this week. Of course, if they do raise the interest rates by 0.75 of 1%, I would have to eat my words. But I think it's got to be cautious with it. I'll put it that way. Dollar CAD. We've spoken about the dollar versus the CAD. It is a game changer bar to the buying side. Go hard if you want. It's not one that I want to trade right now. In fact, I think it's got a limited upside. And as soon as we hit a resistance area again, I'll be a seller of dollar CAD. So I don't want to trade it long. Dollar Swissy appears to be range forming and coming off the bottom of that. So I do agree with the directional bias here. But I'd want to see a higher low before I traded it on a daily chart, maybe, or a 4-hour chart even. And finally, dollar yen, one of the hardest currencies, I think, or hardest asset class or assets per se to actually catch. Does look rather like a support level has been hit right there. And so directionally, I suppose you're looking to trade this long for the week ahead. I won't be. It's just one that I just can't catch. So I'll dismiss it on that basis. But it does look like it wants to bounce up here, and maybe it goes into a range for a bit before we get the next lot of fundamental news or whatever happens next, and who knows what that might be. Righto, guys, that's kind of the wrap. My favourite for the week is CAD Swissy. Now, I'm suggesting that, as I said, if there's no gap in the morning, I will place an order short underneath it with a stop loss above it. But I'm also anticipating that we might get a better price on that based on we've got a potential false break here on the daily chart from Friday. So I'm kind of torn tomorrow morning, and I'm really very keen to see how the market opens, whether I should place a long above here with my stop loss under here, or more circumspectly, if that's a word, under here, and let it form its lower high, and then I can trade it at a better price. But I would hasten to add that because we've got a bullish bar here, if this does go in this direction, it's going to go to a support level, and that support level looks to be fairly far away. So I certainly, if we don't get that big gap in the morning, that's my favourite for the week, CAD Swissy. Righto, folks, that pretty much takes us out for weekly Sunday market update. Thank you so much for being with us, and we'll be doing it all again next. No, actually, I'm not sure we're doing it all again next week. That will have to be confirmed, because there is a major event on in Bali, which of course is the Bali Trading Retreat, and that begins next week. Check your local guides, as they say in television world. On that one, I should have found out before the show, but my apologies, I'm not sure if we're on next week or not. You will be told, as I will be if I don't get off air right now. Have a great week ahead, guys, and thank you for thanking me and thanking all. Thanks for your thanks. Have a great week.